Hey guys, hope all is well. It's Mark here on the Instagram TV channel for Great Homes ATL. Mark and Kurt here with the Great Homes ATL team. Thank you to all of our followers and anybody new that's just finding us. And wanted to use this channel to really give you guys a lot of education, a lot of questions that we get from phone calls, clients that have called us in the past, and of course our Instagram Live, Facebook, Twitter followers, and people that just call us with general questions. We handle everybody from celebrities to professional athletes and also first-time home buyers and everybody in between, relocation, foreclosures, flippers, anything that's really residential, condo, townhouse, single family. But we definitely see from the questions that we're getting, understandably, because we were first-time home buyers ourselves, and we help a lot of people that are. There's a lot of resources out there for you. Number one being us, number two being the lender that you'll be talking to, and number three, the program that potentially could get you down payment assistance programs. There are grant programs here in the state of Georgia. The big one that we really refer people to that our lenders, they all handle, is called the Georgia Dream Program. And the Georgia Dream Program is basically, you don't have to pay it back because it's grant money. But once the money is gone and been used up, it's gone. So that's why we always are really talking about as early in the year as you can, get qualified for it. And now this is like anything else, you have to be well qualified. The stipulations are for the most money is called the Georgia Dream Hardship Program. That gets you $15,000 that will really come in handy, and we'll break it down for you in these two examples that we'll give. To help pay for your down payment and closing costs. And they're primarily in the Douglas, Fulton, DeKalb, and Clayton counties. The other major counties in the area is Cobb, Henry, Gwinnett, Cherokee, Paulding, I believe, and I think I already said Henry. But those counties would be, I think, about $5,000 because it doesn't qualify for the hardship program. So you could still get $5,000, but it becomes kind of potentially not worth it because of higher interest rates anyways. But this is how it can kind of work for you. So you have to have a 640 or higher credit score. Your income has to be $74,000 or less for a one or two person household, $84,000 or less for a three or more person household. Now, you can't be working a part-time job making probably $15,000, $20,000. You're just not going to be making enough money to qualify for a mortgage in the first place. But I would say definitely if you're like 40,000 to that 74,000 range, or 40,000 to $84,000 range. And the really key part of this program is that credit score. So again, we get a lot of people that have scores in the fives and even low sixes, but this requires 640 or higher. And from speaking to and people that have used the program, one particular client that's using it right now, she has like a 720 credit score, and the lender has said it's just such a smoother process, and she's just financially responsible. So it's not for somebody that's like, I'm just tired of renting and I'm always late on my bills and anything like that. It's for really the person that is really a good steward of their financial portfolio, has a good job, keeps good records, has pay stubs, W-2s, all that kind of stuff, because what you're going to do is be tied to an FHA program. So let me give you two examples of price points. The house has to be a resale home also. It has to be tied to an FHA. So if it's a condo or townhouse that's not FHA eligible, you wouldn't be able to do this program. So it's mostly for single family, potentially some condos and townhouses. We'd have to check as we're looking for properties for you if it's FHA eligible. But the house cannot be more than $250,000. So it's $250,000 or less. And it has to be a resale, if I didn't mention that before. So it can't be a brand new home. So it has to be an existing home that is a resale. So two popular price points that we've helped home buyers this past year to utilize this program. We'll start at $175,000. So at 175,000, when you're tied to an FHA mortgage, that's 3.5% down. That's $6,125. And feel free to look back at this and write down some of the numbers. Now, you also will have closing costs. They're typically about 4% of the sales price / appraised value of the home. That's going to be the escrow account setting up for your property taxes, your homeowner's insurance, your attorney fees, your mortgage origination fees, because there's fees involved with processing your mortgage, and obviously the attorney that's handling it and running the title and all the paperwork for the property. So when you combine those two together, the 3.5% and the 4% closing costs, you get to $13,125. So you can see that $15,000 that you qualify for if you want to live in Douglas, Fulton, DeKalb, or Clayton counties. You could have all your property, all your down payment and closing costs paid for. And how that helps is, number one, it's not money you have to ask from relatives. It's not money you have to take from your savings, checking, 401k, anything like that. And you basically also don't have to ask for any closing cost contributions from the sellers, which is something that we do for a lot of our clients, especially on the higher price points. So basically, it's potentially getting a better deal because you don't have to ask for closing costs, and it's a better chance that you'll get the property when you don't have to ask for it. So one of the, again, positives and negatives, one of the negatives is that you do pay a little bit of a higher interest rate. So say interest rates are really averaging around 4.85%, you might pay 5.25. We'll use that as an example. So at 5.25, again, for a calculation for property taxes, we're going off of 0.12%. That's $2,100. Your homeowner's insurance, we estimated about $1,000. It could be a little less, it could be a little bit more. But with that, your monthly payment is $1,262. And you could get some really nice houses in all those counties for $175,000. They might be probably a 3-bedroom house or 2-bedroom condo or townhouse. And if you're paying anywhere near that now, or even paying more, then that just shows you the value that you could be a homeowner there. In the next example, a $200,000 house, 3.5% down would be $7,000. 4% for closing costs would be $8,000. So you add those together, there's your $15,000. One thing to mention also about this program, you do have to show you can contribute a little bit. So they do ask you to pay $1,000 towards this deal. And that money could potentially be coming back to you if it's like $15,000 or less, because they're going to be covering the whole $15,000. So when you put down that $1,000 earnest money, potentially can be getting it back at closing. Other expenses you might want to keep in mind, we do recommend getting a private home inspection. Those usually range from $400 plus, and the appraisal is usually paid for by the client up front. And that will be shown up as a credit as well. So that is typically about $400 plus as well. So all in, you're looking at between $1,000 you're going to be putting down and maybe those two bills, about $1,800, which is really, really good, right? So at the $200,000 price point, we talked about 3.5%, 4%, $15,000, you're covered. Assuming again the 5.25% interest rate, your property taxes being $2,400 and the homeowner's insurance being $1,100, your monthly payment would be $1,438. So there you have it, guys. I mean, that just goes to show you, if you're great stewards of your credit, if you show solid employment history, again, you could have a full-time job and a part-time job to give you more income. You could have 2 part-time jobs. You could have a really well-paying full-time job, but just keep that income, if your income is $74,000 or less, or $84,000 or less, depending on the household makeup. You could just see in this example, you could have a monthly payment of $1,438 for a $200,000 house and around $1,262 for a $175,000 house. So this is my example of the day of down payment assistance programs. We'll be talking on the next video about the $300,000 and $350,000 price point, and how you could really profit in the long run, with real estate. So until next time, guys, definitely give me a call. All our information is on our profile. And thank you so much for following us. We'll talk to you soon.